Starting in the wrong place can actually sometimes be a benefit. A subscriber asked the question, how do you begin as a novice investor? What materials and sources would you kind of recommend? And so we're going to, in this video, talk about things that help me, my sort of process as an investor, things that help me learn more. But the first thing that I want to say is that you shouldn't copy what I did exactly. Because when I set out to do this, I was not copying myself. I was just kind of figuring it out for myself as well. And that skill of figuring it out for yourself is part of what makes a good investor. Yes, I took recommendations from other people. I looked at people who have been on that path, but I also kind of understood that my path would be a little unique. And maybe this is because I have a little bit of a problem with people telling me what to do, problem with arguments from authority, all of that. But I do recommend that just because this is my path, that you sort of listen, but don't necessarily follow it all exactly. If some things resonate with you more, then go for it. If others don't, then that's okay too, because how you are as an investor may also turn out to be different than how I am. And that is part of what makes a market, is that we have different opinions on how to approach things. The first thing, and probably the most important thing, is that you have the interest. And so as long as you have that interest and curiosity, follow it. I became interested in finance when I believe I was about 14 years old. And for the first time, I had a little bit of money in the bank and interest rates were something like 5%. And so I saw in my bank statement, there was a charge for interest. And I was like, what is that? That's free money. The bank is just paying me to protect my money. And then from there, I actually had a conversation with my dad who talked about, well, there's actually other things you could do to make even more money. You could invest in, bonds and real estate and the stock market. And I'm like, what is the stock market? How does that work? And so I was kind of just curious and asking questions. And that was kind of what began my journey. And initially, like everyone, I knew nothing. I started trading a little bit in my brokerage account, following a little bit, the Wall Street Journal, some CNBC, really not good information. But I think it's a part of most people's processes where they begin, because all of that kind of media is very available. And so it is most people's first exposure. Even, you talk about Warren Buffett, his first instances trading stocks did not go well. And he kind of notes that as well too. And so a lot of people are very focused on the price because that's kind of the only piece of information you get at first. And so from there, many people will kind of focus on charts, different technical factors and all that, because when you don't know anything, you don't really know, oh, I need to go to the SEC Edgar database and figure out how to read a P&L and then, do a DCF. And so it's actually okay though that you don't know that. I think that this part of the process is actually valuable, because if you don't experience it now, you may not fully understand how a lot of other investors and maybe traders or gamblers think. And I think it is kind of important. And so one of the first finance books I read, and finance is kind of put in quotes around that, was a book on Elliott wave theory. I remember being told, there's this method that if you apply it, you can, reliably figure out how to generate returns. And, it's about looking at stock price charts. But the thing about the stock price charts is prices, are a mirror of people's psychology. And so you're really analyzing psychology, and in psychology, people tend to have different patterns. And so it's about understanding the patterns people tend to make, and it tends to be pretty cyclical. And it kind of convinced me as an argument. And so that was one of the first books I read, was on Elliott wave theory. I still remember actually how they kind of talked about the general pattern of stocks going up is a 1, 2, 3, 4, 5 wave formation, and then an A, B, C. And then it talked about all these exceptions to that. And halfway through the book, there were so many exceptions to the exceptions to the exceptions that I kind of was like, all right, so this is BS. And, you got to smarten up a little bit at some point, realize that if someone does have a reliable way to make money, they probably are using it and not using it to sell books. A lot of very successful investors will give away information for free. That's not necessarily a marker of whether or not their information is good or not. But generally speaking, if someone is telling you this is how you can make quick money in the stock market, I would be very skeptical of that, because if they could, they probably wouldn't have stopped that to go and write a book to go sell the book to ruin their secret. And so I kind of realized that it was actually good that I read that book though, because it really turned me off from technical analysis for a long time. I did end up reading a couple other books at one point, but again, all of them were very similar. And I'm still glad I did that, because it was something I explored, and at least for me, it's not for me. And I became very skeptical of anyone who said that they are good at that. I really honestly just think they're lucky. I don't know of anyone who's consistently been able to just look at charts and make money that way. Even people who are good traders do a lot more than look at stock price charts. And yes, I do believe there's a little bit of a factor of it being a sort of self-fulfilling prophecy where if enough people are looking at a 200-day moving average and enough algorithms are kind of capturing that, then maybe it kind of works for a little bit. But it's just, at least for me, it's not for me. I really advise you to be very careful of any sort of technical analysis or anyone who is telling you that there's a quick way to make money, because if there was, guess what? They would be doing it instead of trying to sell it to you, which also ruins their secret, because the more people that are applying the same thing, the less likely it is to work for them because they're squeezing the profits out of the system, unless they're actually trading against you, which also happens too. So I don't recommend that. I then had a lot of experience just kind of, again, reading, lower quality, but what's available, CNBC, Market Watch, kind of articles like that, Wall Street Journal a little later on, which is better, but it's not going to really tell you too much on how to invest. All of that, though, was kind of mirrored of me trading in my own brokerage account. I played around with all sorts of stuff that I shouldn't have, but it was a small enough dollar amount that it was good lessons. One of the first things I ever ended up trading was like double and triple leveraged ETF products. I didn't know really what they were other than they went up much more than other stuff, and that made it more fun. And when you're talking about small dollar amounts anyway, then it's not a big deal. But, if you're using money that you're okay kind of losing and thinking of it as just education, then that's not the worst thing in the world to do, to just kind of get some experience, mostly with what doesn't work. I'm glad that I had that experience when I didn't have much money when I was, in high school, losing a lot of money on option contracts, on triple leverage products, all sorts of different stuff like that, because I never fell for it much later on when, I did have more money. And so if you do want to play with that, if you're younger, that's okay, that you do get that direct experience, but just think of it as education and understand you're going to probably lose a lot of money if you don't really know what you're doing. And so the person who asked this question, I'm guessing they kind of went through that first stage and now they're trying to figure out more. How do I develop as an investor? One of the first books I actually read that totally changed my life in high school was Snowball. That is a Warren Buffett biography. That is going to be a game changer for someone who never understood the difference between price and value. Actually, at the end of this video, I'm going to link to a video talking about price versus value. That is one of the key, most fundamental understandings you need to get as an investor. That is really what is going to allow you to move beyond sort of just following the first level thinking, which is, buying a stock and hoping the price goes up, to more a graduate level where you're actually looking at the underlying business. You're understanding the business's cash flows, analyzing it, all of that. And so Snowball was the first book. It's a Warren Buffett biography that kind of opened my eyes to that. From there, though, I read a lot of different investing and finance books. I remember one summer in high school, I basically just read 30 investing books. Some of them were psychology books too. Influence is that psychology book that Charlie Munger always recommends. In terms of some of my more favorite investing books that I got a lot out of, Phil Fisher's Common Stocks and Uncommon Profits I liked. There's kind of the generically named Value Investing book by Bruce Greenwald and Judd Kahn. That one's pretty good to get you started. I don't want to just give you a list of all the books I recommend because I feel like it almost doesn't matter. There's a lot of books out there. Just read as many of them as possible. And when you get to the point that reading one more doesn't really teach you anything, then you're starting to have read enough investing books and you could switch to more business books. And so the first stage, you're reading a lot about just investing mechanics, getting different ideas of investors, how do they invest? And it's really probably you read 30 books on that. And by then you're kind of good. I still do read investing books now and then. I really don't get much from them. What I still like a lot more though is business biographies, business stories, understanding about the actual business, because as Warren Buffett says, great investors make great business people and great business people make great investors. And so graduate into actual business books. I also recommend reading a lot of investor letters. This is going to be a little bit more advanced, but find some investors you like, read their letters. Of course, you should read Berkshire shareholder letters, but there's other more technical ones too that maybe you'll enjoy. Nick Sleep, Terry Smith, there is a lot of them that are out there. And so in the future, I might actually aggregate a lot of these investor letters for you and talk about different insights and stuff. If you're interested in that, drop a comment below and we can do that. The next thing that you could do though is actually start investing. Pulling up annual reports, pulling up investor presentations. Pick simple businesses that you understand to get started and try to read the financials. If you don't understand the financials, go buy an accounting textbook, go watch some accounting videos. There's a lot of sources out there. Just try to get your hands in it as much as you can and build that skill of finding out information for yourself if you're not sure about something. Because again, that's what an investor really does, is they're figuring things out for themselves. They're figuring out, is this product going to be successful? They're figuring out, what do I think is going to happen with it in terms of monetization in the future? There are a lot of different factors involved in that, but when you're starting out, just exercise. Do I understand how cost of goods sold is recorded for this business? What are the costs involved in that? Is it in the annual report? Probably, but if it's not, can Google help me out? Can an investor to help me out? And so just in summary, I think you should start by following your interest in finance. That maybe for some people, Forex or currency or technicals doesn't mean that that's where you stay, but if that's where you're interested in, test that field out. Eventually, as most people do, if they're interested in real investing, they're going to find their way to, the Warren Buffett sort of style of investing, which is you look at the business, the underlying business, and then it becomes a question of how do you analyze the business. And we have a lot of sources on that in our video backlog here, but we're going to also talk a lot more about that in the future. And so if you want to continue to learn more about how to analyze a business, hit subscribe and watch this video here on the difference between price and value.